Hello traders, it's Samurai Trader here. Welcome to session 119. In today's session we're going to be studying or closely looking at trading the Russell, the RTY. Of course there is a micro contract where you can trade the Russell. It's 10% of the value, and we'll be looking at a recording of a number of live trades I also took on the Russell, where I'll be walking you through why I entered a trade, why I exited, etc. In fact, I could have done a lot better in this trading session. I was going for a larger target. Now, as I state here, at the $1,000 a day challenge, I'll be talking to you about what's a reasonable daily target per contract. We'll get to that in a moment. And of course, what I teach you in these sessions you can apply to futures, forex, stocks. It really doesn't matter which market you're trading. Now, there is a risk in trading. Don't trade with money that you can't afford to lose. Stay on the simulator until you're consistently profitable. Now, very quick advertisement. I'll just show you 3 slides here. First of all, you can download my free training manual. Use the description link below. Please make sure you subscribe to my channel, and also I think I've fixed the camera issue. If you had to watch my last 2 videos, it was a little bit foggy, but it appears I've fixed that. And always, my videos are raw, real, and unedited. If they're not as fancy as what others might publish, well, so be it, but I'm a trader. Okay, I'm not a tech wizard. Anyway, subscribe to my channel. If you're a new trader or considering trading for a living, or if you're an experienced trader maybe wanting to improve what you're already doing, why don't you even join me and become a member for $197. All of my indicators you see on NT8, I've got them coded for TradeStation as well. For other platforms, I give you the settings so you can basically tailor make any standard indicator to do exactly what I do on my charts, or just about everything. So whether you're with Thinkorswim, Sierra charts, or whatever. So for the $197, just very quickly get all of my indicators. There's over 200 hours of instructions. No, you don't have to watch them all. There's over 15 setups. No, you don't have to trade them all. In fact, you only want to focus on 3 or 4 to begin with, which we won't have time to cover today. So this is an extremely comprehensive program, and as a bonus you can also attend 8 of my live coaching sessions. Now the quote is, give a man a fish, you feed him for a day. Teach a man to fish, you feed him for a lifetime. So by attending my live coaching sessions, that is every Wednesday, it's every Tuesday and Wednesday evening, 6 p.m. to 8 p.m. Eastern Standard Time, you get to attend a live session for 2 hours. If you can't attend, they are recorded, where I explain the setups step by step. If we see any setups that are setting up at the time, I'll explain those live, as well as that we walk through step by step the psychology of trading, money management, and a whole lot more. Now that's free for your first month. Should you decide to wish to continue, we've got around 290 traders attend this class. It's $97 a month thereafter, but you got to drop me an email if you wish to continue. Right, end of ad. Let's now get into this. Now, many of you that watch my channel know I go through this very quickly every session. I believe to succeed as a day trader, you've got to have a compelling future, one that excites you. Now, I know that a game changer for 98% of the population here in Australia and globally, the USA, would be if you were earning $1,000 to $2,000 a day. How do you do that? Well, let's talk about realistic targets, earning $100 to $300 a day per contract. Unfortunately, so many traders have sold the false story that you can easily go and make $500-600 a day per contract. For the experienced trader, very experienced trader, that may be true, but it's not the reality for the majority of traders. So in these sessions, and in today's session, you'll see I'm going for a realistic target, and I'll show you how to do exactly the same. Now, what is important here and what sets my trading apart is the technique that I use of trading in the direction of a higher time frame. So what we can see here, the little red line, is what I call my entry chart, and I actually have 2 higher time frames. one is very, very important, the anchor chart one, which I'll actually quickly show you that when we get to the charts and explain a couple of things there, because it can play a pivotal role in your profitability as a trader and success as a trader. So what I'm looking for is pullbacks, retracements on the lower time frame in the direction of a higher time frame. I've been day trading now for over 28 years, and I've pretty much discovered a set of time frames to use using for my entry chart, anchor chart 1, anchor chart 2 on various markets, and I'll perhaps explain that a little further down here. In fact, here's a slide here. Now, the session I was trading in today's recording that I'll play back was the 4-tick Renko on the Russell, and that was in the New York afternoon. So during the New York hours, you can get away with usually trading the 4-tick, except around red flag news and news announcements like that. So most of the time you can trade a 4-tick. During the after hours market, for an example, right now it's 12:28 a.m. Central Standard Time, and you could easily be trading for 2-tick. Now in another 2 hours we'll actually have the London Open, so the market will really start to pick up, but you'll usually be quite okay with the 2-tick, maybe jump up to the 3-tick, but absolutely the 4-tick during the New York hours. So, and the reason I bring that up is you'll have some traders, usually they're traders that aren't that they're what I call have a fixed mindset. That is, they think they have all the answers. They've got, you know, look, Susan Dweck, very quickly in 2006, Dr. Susan Dweck released a book called Mindset. And what she said was there's 2 types of mindset: the fixed mindset, the growth mindset. For an example, a person with the growth mindset may sit back and say, okay, it looks interesting, I need to verify what he's doing and how he does it, but it looks interesting. The growth mindset person, no, this won't work, or that'll never work, or I tried that and it didn't work. Traders, what I want you to look at as I get to the charts very soon and show you the setups, I want you to look at why they do work, and it is because I'm trading retracements and pullbacks in a direction of a higher time frame. The only reason they won't work is if you're trading the wrong time frame, that is if the market's too fast. And so that's about the only thing, of course, if you don't execute the trade, that can go wrong. Certainly I'll show you a couple of things today that I could have done better on, but the only thing that'll really stuff you up here is the time frame, unless of course you're not executing. Now more on that when we get to the charts in a few minutes. Now also, you can apply what I'm about to show you to any type of chart. My favorite are tick and Renko. Renko's, if you're struggling with the trading, you've got to try Renko. Okay, it smooths out price action, and you'll see my turning point indicator and some of the other things I do. Nothing magical. Gann famously said there's nothing new under the sun, but traders, after 28 years I've come up with a few things and modeled a few things that really do work, as you'll see when we get to the charts in a moment. Now you may be wondering, if you're a new trader or even an experienced trader, what markets am I looking to trade? I'm looking for a market that has good volatility, that gives me waves or legs and trends well, okay, and it's got good daily volume. Now when it comes to futures, Forex, of course, you've got lots of markets that do that. I love the yen, for an example. Now rather than trade Forex directly, now I like to trade the yen using a currency futures market, a contract that's put out by the CME. But any trending Forex market, so the yen, the euro, with the futures markets, I love oil, gold. The ES can be a bit quiet at times, but then we've got the RTY is fantastic. I love the yen, as I mentioned, the 6A, sorry, that's the Aussie, the 6J. But that's what I'm looking for. I want to see waves and movements in a market. So that also means then I'm looking at the daily volume. Now you don't have to follow as many markets as what I do, and as a member, as a student, of course my job as your coach is to teach you, subject to your account size, which are the best markets to trade. Now with today's lesson, we're going to be looking at the 4-tick RTY, and this, as I mentioned, was in the afternoon session. Now in a moment we'll go to the recording, and then we'll go to the actual back to the chart itself, because it was far from perfect trading from my point of view. But you don't have to be perfect, you've just got to be consistent, and that's the thing. And it's best if I explain it when we get to the charts exactly, and you'll see it with the recordings here. Now it was 50 minutes of trading, still a really good outcome, but I could have done better. But that's the thing with trading. With trading, you're learning every day. Seriously, the education never finishes. And so I believe as a trader, I get better and better every day. After 28 years, I can still improve. Now also, you'll hear me talk about POQ, the power of quitting. That is, I like to hit a target and finish for the day. That works for me. Okay, I'm 65. I don't want the stress. If you're a younger gun, and for an example, I only trade 8 to 16 20 maximum contracts with any open positions. I've got a very strict money management regime that I work to. For an example, on this market, I trade 8 contracts and I'll add up to another 8, and so that will max me out at 16. Okay, so I'll explain that as we go along. So it all comes down to, we never ever risk any more than 2%. Now I risk around 1% per trade of my account size, so I can add to a position and have up to 2% risk. If you are automatically trading at 2% risk, you can't add. Well, I recommend you don't. Okay, there are old traders, there are bold traders, but there are no old bold traders. Money management, besides the psychology, is number one. We've got to preserve our capital. It's so important, traders. Now very quickly here, you can start off with $250 trading this market. Okay, if you don't have in this case, what I'm about to show you, really need a minimum of $4,000. I'll get to that slide in a moment. You start on the micro. Now here in this case, if you're going to trade during the Globex market like this time of day, or from 6 p.m. onwards Eastern Standard Time, you'll get away with what we call a 2-tick Renko, and you only need $200 to $250 to start on the micro. Now you start there, $13 a day. Within 12 weeks, you've got the potential then of rolling over and starting to trade the big contract, because you've built your account size. Now you're targeting 125 a day, and you've got the potential, as you can see there, within 14 weeks, $46,000 account, and you're 10,000 a week. Now that's if you're trading the Globex. Now if you're going to trade the New York session, here in this case, I've got 450. You can really start with about 400, $23 a day, because we're going for larger moves. Within 12 weeks, you can then roll over and then start trading the big contract. Now here I've got a 4,500 account. Now what that actually means is, it comes down to your stop loss. Now remember, earlier I said we never risk any more than 2%. Well, in that case there, we can have up to an 18-tick stop loss. Now realistically, traders, you can get away with if you're nimble and use buy stop sell stop orders, you can get away with a 16-tick stop quite comfortably, which means you only need $4,000. Now what's a realistic target? I mean, no BS. A realistic target is $200 a day. That is extremely realistic, as you'll see on the charts in a moment. You've got the potential then within 12 weeks of earning your 10,000 a week trading your 10 contracts. That is a realistic target. Now I do legally have to say, of course, subject conditions, subject to your experience, and your results are probably not going to be as good as mine. I do have to say this legally, because I've been trading a long time. So I think that legal, I meant to say, or some said I should be saying, your results may not be typical. Now it really comes down to then, how do you make your results typical? Every trade I take is a pattern. We're very good as human beings in picking patterns. And so as we get to the chart in a moment, or this live recording, everything I'm looking for is a setup, is a pattern. And as Mark Douglas says in his book, The Disciplined Trader, you want to choose, if you want to master the art of day trading, choose a system that is based upon patterns, okay, because we're very good at picking those. Now if you want to go for your 300 a day, look where you are in 8 weeks. Okay, 12,000 a week potentially. Your account's now 43,000. This is for a trader perhaps is going to put their 3 to 4 hours a day in. The 300 plus is very achievable, as you're about to say. I see during the New York hours. Okay, I believe it's also during the Globex hours, but let's just be conservative here. Now let's go to the charts of the recording where I'll walk you through. There's no sound, so you'll hear me talking now, walking you through, because when I trade I like to just focus. In fact, I think on this one I've even got I chastised myself for not being focused, and I missed a couple of great trades, as I'll show you. But what's really important are our support resistance levels. Now traders, I can save you years in my course by showing you these levels and how to actually trade them. And fortunately now there are indicators on virtually every trading platform that automatically plot all of these for us. So we're just looking on our chart. So I love the standard floor pivots and the Camarilla pivots, your prior days open, high, low and close, our major EMAs, our swing highs and lows, which I didn't quite follow today, but you'll see an error I made with that today, and the current day's high and low. So let me play this recording. And so with this recording, let me just start here, and then we'll go to the chart. So what I've got up above here is, see this here, this is called angulation, and this thin black line is a support resistance line on a higher time frame. Now at times I'll pause the video, otherwise we could be sitting here for an hour, and so sometimes then I'll put a trade in and I'll just restart the video. So what I've done here is I've gone short here based upon what I call angulation, and my target is down here at a pivot and down here at the 89 EMA. Now what you'll also see me quite often do is I've got a setup called a T10. It's a reversal setup or a confirmation. So if I see a T10 setup, I actually had, there would have been one over here if I was trading, I'll actually add to my position, because if traded correctly, they're a very, very high probability trade. But I need confirmation. So see how I've got green candles here? I'm not going to go short here until I get a confirmation. And I'm just going to mute here, just have some water for a moment. So just here I have gone short based upon a T10. So this is where I mentioned that I only risk around 1%. So risking 1% means that I can add. However, in total open positions, I'll never risk more than 2%. Now just note there, I place my stop for that particular trade one tick above the swing. One tick above the swing. Sometimes it's 2 ticks if I get sloppy, but it's usually 1 or 2 ticks. So if I went long here, I'd have a stop 1 tick above. Now down here is my target. It's a fairly mechanical target, and for me traders, I'm generally will generally go for a fixed target. I like scalping rather than trailing. I just find I get a bit anxious. That's the best way of putting it. I'd like to get in, get out, get paid. But down here is my target, straight down here. Now sometimes you'll see me move my stops up and down if I think well, let me say about the stop. I never take it above the swing unless it's something unique, but too many traders will move their stop hoping we'll price will stop and reverse. Where I'll move my stop back up is on my ATM. I've like just there, I've had it where it goes to break even, as you can just see there. If I feel I might get a small pullback, I'll go back up there and place my stop where the original stop was. Okay, but I don't make it any larger. So here typically I'm going to have a 14 to 16 tick stop loss per contract. Now just here I've tightened it just in case I stopped or bounced, I should say, because I've got a pivot just here. I've got the 89 here, so just a good spot to sort of tighten. Yeah, just stuffed up my order there a little bit. Well, I tried to do something that I can't do. I have to excuse that there for a sec. Okay, so we're out of this trade, and you can see where I exited this trade, right on the pivot. Now this is if I remember correctly, where I had my first stuff up. Actually, I was typing this up and I can't remember what I was, but something, and I didn't jump in on this next trade, and oh no, sorry, I did, my apologies. No, that's right, I went to enter but it ran away from me, my apologies. So this is where I'll probably type in focus. So I went to enter this trade, but I was late to the party. Okay, I should have actually been in on or around just above the close of that third candle. And if a trade runs away, I won't chase it. Okay, I'll just wait for the next, but the lesson there is focus. Now, so if we had have taken that trade, with any trade we also say, where's our last major swing high? It's over here. So I'm looking for relatively close swing highs. Okay, I'm not looking way back here. As a scalper, I like to look fairly close, and you can see I've just marked that up. So this would have, if I was in this trade, this sort of would have made the target I was actually targeting. Now I can't pull my chart down here because this is a recording, but just up above was, if I remember correctly, a pivot, and I'll probably show you that in a moment. What's that say? Target the high. Well, I'm talking about this high just here. Now I don't always go for that, just depends how big that move or large that move is, and quite often I'll what I call front run these swings. I'll get out just before those, because a lot of other pros do exactly the same thing. Okay, we want to get out before that. Now if I remember correctly, okay, and so my target, by the way, is I'm after a minimum of $200 a day per contract, if you're wondering just there. So waiting for a retracement here. Now just here I'm going long again. So here I've got a long trade. Now see just up above, let me pause this for a moment, and you'll see I had a real challenge here, because I was targeting the low up here, which will normally go up and hit, but you'll see over the next 2 or 3 trades I get up like $400 per trade, but I'm targeting the breakout. I don't get the damn thing, but just in case it happens fairly quickly, I'll show you. So here I've gone long. I haven't adjusted my stop yet. Normally I do it. That's the first thing we want to do, by the way, generally, is to make sure we adjust our stop. There we go. So I'm adjusting my stop just below that swing. Just note your high here. So I'm looking to hit this high. Now I do have a break even, so quite often you'll see I go to break even, and we'll just see what happens. So I'm saying this is my target up here. These are price magnets, so yesterday's open, high and low, they can become price magnets under certain conditions. So I'll actually move this along a little bit, because I want to show you a couple of things on the actual charts. I don't want to sort of go much past 30 minutes with this here. So you can see here that swing high. See how we sort of stopped at that time to the swing, right? So that's fairly typical, what we call traders taking profits at that level. Okay, so we get a bit of a breakthrough. I'm up 400, and this is where it can be tricky. I pulled my stop back down again. I'm not going to let it come all the way down, and I was really targeting this high, and I ended up getting out of this one, as we'll see here. We didn't hit that. I get a retracement just above that. It comes down and stops me out. Now when I say stops me out, at break even I've locked my ticks in, so I make a little bit of money, but certainly not the $400 that I was targeting with that trade. Now I'm about to be out of this trade here, and I'm out of that one. So what's our trend direction? We can see quite clearly we're in an uptrend at this stage. So now I get a pullback. Remember correctly, for members watching this, if I remember correctly, that was actually a big 2D that actually set up at that time. So as we pull back, I'm on the ready, and I'm still thinking, and see how I pulled that down. I'm looking for pivots up above, and it was a 2D. Now I've entered this one here. This is what I call a 2B long. And I remember this because I had a similar scenario over here, that I went up there, and let me just hurry this along. Once again, normally I'd then be thinking, okay, let's target this high, but I was targeting yesterday's low. Normally speaking, you'll go up and give these pivots a kiss, and so here, whoops, here we got out, that's right. So I pulled back. See that there? Know where I put my stop? One tick below. That came down and tested my stop to the tick. So having my, and this is the very reason why I had my stop loss there, one tick below. Okay, and for members watching, yes, this was a bet the farm. So I really should have added to this position. I really should have added to this position. Entered another 8 contracts on the bet the farm. So we'll just hurry this one along a little bit. So up we go. So here, another nice potential trade, and I should have been trailing a little more. Traders, woulda, coulda, shoulda. You know, as I mentioned, usually I'll get up above these levels. So and if you move your stop loss up too early to trail, quite often it comes down, stops you out. Okay, and so it's, you know, sometimes you can you know, do I not, you know, hindsight's a wonderful thing. So I could have trailed slightly tighter, but once again, it's the end of the day that really matters. So here we'll go along here. I get stopped out here in a moment. When I say stopped out, I still picked up some profit there. Now it was nearly almost 3 p.m. Eastern Standard Time, and quite often we'll get a move in the market at 3 p.m. Central Standard. Now here, just to point this out, here I'm actually checking my what's happening on my highest time frame. Now I'm also checking right here what's happening on, I think this is the anchor chart 1, just checking that out. Yep, so the AC1. So I check out what's happening. Now look at this here. Basically we formed another big double top just there. Okay, so I still haven't hit my target, and really if I'd have scalped that one there, and even got in on this one, which that cost me $400-500 by not jumping in there. Okay, woulda, coulda, shoulda, and I should have added to bet the farm. So now I'm pulling back, and as I'm retracing here, I'm on another screen. So I've got multiple screens. So on another screen I could see here on the anchor chart 1, I was having a big this was actually right back to here. This was an exact 50% retracement on the highest time frame. sorry, on my anchor chart 1, not on the highest, but on my anchor chart 1. Now I don't always trade with fib. Actually, I don't trade a lot with fib, but if I'm thinking of taking a trade and if fib happens to also confirm it, I'll actually enter the trade. So this here was an exact from the swing low way down here up to there down to here was a 50% bounce. Now if I hadn't entered this one and I got in very late with that trade here, and let me just stop this, I want you to remember this black line here. Okay, that's a major support resistance level, and as I've said, after all these years I've found a number of lengths of EMAs that are just amazing the way they work. So we had a 50%. If I missed that entry, I had what we call a T10, also known as a ka-ching trade, just there anyway, and I got out at around the major support resistance level just here. Now let me just go along here a little bit further, and this level is critical. Okay, so it's a wrap. I've hit my target for the day. Now what I'm going to do now is to minimize this, and let's go directly to the chart, because I just want to show you this here. Oh, by the way, this is live as we are now. This is during the Globex session. This time of day we'd be normally trading the 2 tick. This is a 4 tick. So let me go back to that time, just one moment. Okay, so it's best I show you this directly on the chart. So these are potential entries. See the arrows here, traders? These are what I call my turning point. There, the white paint bar you'll see there's one there my super scalpers there. That's a trade I took up there above. That there is a big picture double top. So this is why it's so important, traders, that you learn to trade with higher time frames. Now this is my anchor chart 1. See that there to there, and see that major divergence, and here with the midline if you wanted to trade the midline as well. So this is where I wasn't on this one, but would have made a beautiful short. Now with any trade we take, you always look at what's in front of me, particularly when your EMAs are in an uptrend, because if you're taking CT trades, counter trend trades, and you're trading into an EMA that's against you, you just want to be very careful there. So that's where we would have exited. Now down here then we then pulled back, and note this point right here, and look what happened then with price. Okay, that's why I wanted to get out and not go for a larger target, because we reversed pretty much right there. Now just looking then straight at that, I mean, we can talk about discretionary entries, or how do you know where to enter? Well, see the arrows? So the arrows and the white paint bars are giving you a heads up of potential entry. So's the black dots. I call that the rule of 1, by the way. And see your trigger line here? You don't want to take your rule of 1 just there. It's against your trigger line. Now you can also use the trigger line, this black white line here, to stay with your trade, to trail if you like. Now remember before I was talking to you about what's a really sensible target here. $200 a day. So what is that? That's 20 net steps a day. So 20 of those a day makes you very, very wealthy. Okay, but see how you've got to be careful of pivots. See, you bounced off that pivot, second entry, we bounced off the pivot, little bit of support resistance at the pivot. So traders, these setups, what I want to show you was this here, the 50% retracement there. Look at this on the anchor chart. It's not until you're really looking at an anchor chart that you really realize that, hang on, look at this. So using my little fib tool from there, that's your highest point. Look at that there, an exact to the tick, 50% retracement just there. And so we see this every day, major points. Now no, I won't even get into the 70.7. I'm sort of digressing here a little bit, But traders, it's just a matter of learning these patterns. Do I have a fanning of the EMAs? Do I have a turning point or a super scalper or a ruler one? And so it's not rocket science. It's about getting the screen time, and this is where traders say, oh, you've been selective. Well, look, just before here we were trending on either side, and what you'll notice here is I'm mainly going with the trend until I get major angulation or major divergence. So how do you confirm divergence? There are set rules to that are very rules-based, very mechanical. So traders, why don't you come and join me as a member, and I'll teach you these setups. There's 38 PowerPoints. There's I think it's 38, maybe 36, might even be more now. There's hundreds of hours of online instruction, but you don't have to watch it all. The best thing is to attend the live coaching sessions. Now also, let me be realistic here. You've got to treat this as a 90 to 180 day internship. You know, if you, with trading, you tend to bring to trading any personal issues that you've got in your life. If you're desperate for money, okay, you're going to bring those urges to your trading, which may mean you may be impulsive and you may be impatient. You need to harness those. Trading truly is 90% psychology, 5% money management, and 5% the setups. In many ways, the setups are easy. They're really easy. It's the head stuff that really makes a difference. So if you're impulsive, a gambler type mentality, we've got to get that under control, because if not, you'll bring that to your trading. If you're so damn fearful, you'll bring it to your trading. Now, how do we get over that? So if you've blown your account 3 or 4 times up till now, you start on the micro. Okay, well, first of all on the simulator, then you go to the micro and you target $10 a day. Now this is beyond, and now I'm getting beyond where I really wanted to go here. By the way, go and join using the link below. And by the way, you can also get a copy of this spreadsheet that I use in the description link below, but you get all of this and a whole lot more when you join. But what I want to say here, traders, is that you need to reframe your past experiences and say, okay, trading's been tough for me up till now. What if you've lost a lot of money? Okay, you've got to reframe that and say, I've lost a lot of money up till now, but that's been part of my learning education. I'm going to, if you're already making money, you reframe it and say, okay, how can I use what Ray teaches to improve what I'm already doing? If you've found trading tough up to now, or you haven't been successful, or you're a new trader, you start out by, on the simulator, there's 4 specific setups which really drill down to 2. There's 4 things that sort of gel together to give you the highest probability trades. Now I want to show you this live. Now if we look at this live right now, so if we go to the 2 tick, so let me just go to the 2 tick here, and let's go to the 4 tick just here. Okay, what have we just had just here? So this is how we can really simplify trading. This is what I call the cloud. Now if you don't have NT8 here, it's the stacking order of the specific EMAs that I use. But I want you to now look over at your higher time frame. See that blue line there in an uptrend, see that green line, and of course my EMAs are all in an uptrend, and just there I've got a trigger line, I call it. You can take any trade you like, any pullback in the direction of the higher time frame when I've got these pointing up. Now where traders will say, oh, won't work, they're fools. I want you to consider the logic here, traders. We're looking for the retracements and the continuation in the direction of momentum. In real estate, it's location, location, location. With what we're doing here, it's momentum, momentum, momentum. It's about really waiting for these retracements. Now, how did you actually know to enter these? Well, see the arrows in the direction of the cloud. You can also turn the alerts on on these. The deeper the pullback, by the way, the better. See that little shallow one just there? That's also straight into the pivot. Got to be very, very careful of that. Now and the pivots are very close together. I'm recording this so technically this is early Monday morning USA time. So I trade Sunday afternoons, which is the Globex session. So the market actually opens 5 p.m. Central Standard Time Sunday afternoons. That's Monday morning 8 a.m. Sydney time. 8 a.m. 9 a.m. I get lost on the time frames, but anyway, back onto this. What you're looking for here, and let me just, what the heck, okay, so see this here, we come down, we pull back, okay, what's the direction of my EMAs? What have I got up there? An arrow and a super scalper. What I've got here, an arrow and a super scalper. I look down here, 240. You had 20 minutes to execute this trade. Now this is the 2 tick, and what that means is each one of these steps is only worth $5, okay? But if you're trading this time of day, you only need really $2,500 to trade this market, and that means you're never risking any more than that 2% we've spoken about. Once you step up to the 4 tick, as you get into the New York session, you need a minimum account size of 4,000 or 400 if you're trading. So as we come down, okay, in a downtrend, look over at the right there. What's happening with my indicators on the higher time frame? We're in a downtrend. Okay, what have I got right here? I've got a turning point indicator. Now that plots basically you've got the signal. You can be in on that second candle, maybe the third, just depends. Sometimes you'll get it, it takes a bit longer to turn, like there. So and see this one turned very, very quickly. Okay, and down we come, and this is where also you'll see me doing this. What I'm looking for here, I'm looking for where are my pivots. So just here I've got yesterday's close, I've got a major pivot there. Down here I've got the current day's low. Okay, and whammo, surprise, surprise, we bounce off the pivot. Remember how on that live video I was just showing you before that I'll target the high, the low, and I was missing it? And the reason, this is pretty rare. See, we normally come down and we'll hit those levels. Now we're getting a reversal down here. How do I know I'm getting a reversal? Look at my cloud just there, but I want you to look at the secret sauce on the anchor chart 1. Look over here. See here how the trigger line's now pointing up. Down here the midline is up, and I'm about to get a turn right here. Now it's certainly not perfect trading. It's not going to get you in every one of these would have made money, but so you might say, what about that one? That didn't make money, the turning point. No, that is correct, but I want you to look over here as well. You were trading directly against the trigger line. But not only that, if you went to enter this trade here, what's the color of the candles on your higher time frame? They're green. You want to be trading in the direction of your higher time frame. Look at the cloud. I've got a blue cloud now for long trading. Now as we got up to this high just here, and I've got it set up on another screen, well actually getting beyond, I was going to say we're getting beyond all of this. We're talking about divergence and whatever, which and we're 43 minutes into this, so I won't go any further. But traders 197, you can come and join me. Let me teach you these setups. Once again, if you don't have NinjaTrader, I give you all of the indicator settings. So and just about everything here, like floor pivots, you can get for every trading platform. There's indicators, current day's high and low and open. There's virtually every trading platform has those, but it's about learning how to trade those. But anyway, enough. Look forward to seeing you on my next video and hopefully in one of my coaching classes. Thank you, traders. See you next time.